Seen us repeatedly hit record highs. More to come. Lee Munson, President and CIO, Portfolio Wealth Advisors, comes back to talk with us. So, Lee, I just want to start with today. Like, what do you think happened? Because we all came to work and we had this huge deal. And we had tax reform go through the Senate late on Friday, and it looked like, hey, we're off to the races, and it kind of fell apart.
Well, I mean, the way I look at it is you got to have some people out there, some big investors who are short going into the weekend thinking this was all going to fall apart, that there wasn't harmony between the House and the Senate. And so I just think you have some short covering. I just think you have some day traders in there. So
what do you think about tax reform overall? There's a lot of people, out on the street saying this is going to be great. If you have a company that has a lot of domestic revenues, you want to get in there, and it's leading to this whole the great rotation, everybody getting out of tech and I guess into financials and other sectors. Do you buy that?
I mean, I don't think that tech has a friend in Washington right now, right? These are people who voted against this president. And these are places that hire very little people, have a tremendous amount of cash hoards, and keep a lot of cash abroad. So not really friendly to what this administration is trying to accomplish. Now, I wouldn't go so far as to say I'd rotate into financials, because as we're going to talk a little later, I'm concerned about tightening financial conditions. But I'd say, yeah, I mean, I don't think this is the time to be jumping on FAANG stocks, right?
So do you think it's an opportunity to buy FAANG stocks?
No.
No.
I don't. Oh, no, I don't.
No?
No.
Don't?
No, I think there's a lot of other stuff. I mean, I think that you should go and buy things that actually have assets that are undervalued right now. I think you follow that sort of that domestic companies that are over leveraged, that need a little tax relief to keep the needle moving. But I would say that I remember in 2013, instead of FAANG stocks, we had the golden apple rally, buy gold, buy apple. This is just this all over again. So I don't want to buy yesterday's war. I don't want to fight these FAANG stocks. Just the same, like, what are we still buying gold, thinking like it's going to go back to 2000?
So what should we be buying here as you look out? Because you see some tightening conditions coming, and you are worried about an inverted yield curve. Is that fair to say?
Yeah. So I love $3 words. Inverted yield curve is like my favorite one. But let's just say that when the yield on a 2-year treasury becomes higher yield than what's on a 10-year treasury, we would say that it's inverted, right? And all that means is that markets are trying to signal tightening conditions, okay? So when that starts happening, for instance, if you go in these degenerate trader blogs where people think they're hedge fund traders, they're going to tell you right now, last couple of weeks, the yield curve, it's plummeting, it's crashing, right? Well, not yet, it's not inverted yet. Then there's some analyst over at Citigroup who wants to be an apologist. That came out today. And he said, well, it's only because the Japanese pension, who are they? I've never heard of these guys, are selling all their short-term treasuries and buying longer-term treasuries. Yeah, that's the whole point. When they start doing that, they're saying we don't see the growth anymore. We think that there will be tightening financial conditions. So when you get enough players like these tiny people like the Japanese pension, who are they? Only the largest pension on the planet. When that happens, then I'll come here and we'll set a little countdown clock. And 12 to 18 months after that yield curve inverted, I tell you, 9 times out of 10, you're going to get a recession. So when that happens, instead of just buying any dip, right? Because right now, I'll buy any dip.
You will.
Oh my gosh.
But you just told me you don't know FAANG.
I didn't say I'd buy FAANG stocks.
You'll just buy a general dip.
I might buy some small cap, I might buy some emerging market indexes, I might buy some international value if you want to know my cheat sheet, right? So I'd buy anything that's cheap on valuation, and I'd buy small US. I prefer value, but any small US. I might even look at REITs, but that's a whole other can of worms, right? So the idea is that once you get that inverted yield curve, you have about 12 months before you could have most likely get a recession. So I'd say, 6 months into it, don't just buy any 2 or 3% dip. Then I got to wait for a 10% correction. I want to see small caps off 15%. So it's still the same thing, buy low, sell high. You just have to increase the magnitude once you're in that inverted yield curve space, and make sure that you're ready for ultimately a 20% top to bottom sell off in the markets.
Talking buy low, sell high, can we talk about Bitcoin?
Yeah.
You in it?
Man. No.
Not at all?
No.
Touch it with
I'm
a
so
10-foot
stupid,
pole?
Right? Okay, so last week I was at this really cool dinner at Meow Wolf, which is in Santa Fe. It's like the most incredible art collective on the planet. And I'm sitting there in this dinner, and it's a bunch of people like me, don't eat animals and stuff. And I'm introduced to this hipster with a beard, and he's like, oh, I just sold my coffee shop, billionaire. It wasn't Howard Schultz.
Was it a chain of coffee shops?
No, it was just like
Starbucks.
No, it was just some like place in Albuquerque, right? He said, I've sold my coffee shop and I've dedicated my life to cryptocurrency trading. I'm like, ding, 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 right? And I think he thought that that was a good thing, right? This was just like when I was a kid on the street during the dot-com days and people were selling their delis and mortgaging their houses to get involved. Here's the difference. This time around, instead of dot-com where you literally had people sell their homes and cash out their 401ks, everybody, starts off buying 1,000 here, 1,000 there, because you really can't trust it. It's not liquid.
That's me.
Yeah.
That's like it. I'm not selling a coffee shop, but
right,
you're
not going to put half your 401k into that. And so I think the magnitude of this bubble is a little bit different. I also think when you look at Wall Street's done two things. The main status quo Wall Street a few years ago, and I was talking to a really cool dude this morning who's a journalist, and he said, Wall Street had a great answer back in 2013. This blockchain technology is interesting, and this could be really good to help security in the business, right? And that's all they said. But when you look at the places where they're actually getting investment funds, and I'm not talking about coffee shop owners, right? Their thesis is either based on there's always going to be an illicit trade in guns and arms. Okay, I'm not involved. I don't play that. That's just wrong. Or it's this old idea of, well, there's only 21 million Bitcoins, and if everybody owns a Bitcoin in the world, then the price is going to be 1 million a Bitcoin. Okay.
Supply and demand.
Yeah, supply and demand. Okay, yeah, not everybody drinks Coca-Cola, not everybody, this was the same thing back in .com when Cisco Systems had those commercials with the little kids from India running around saying, won't you join us? And it's like, we haven't solved poverty in India. Cisco failed in that too.
So you're bringing in the .coms and the Ciscos, and I remember how that ended.
Oh, yeah.
Do you think that Bitcoin could take the entire market?
No, because it's only 200 billion. Now, granted, it's a little freaky when you say Bitcoin is worth more than Bill Gates and Warren Buffett. It's bigger than a lot of industries. I get that. But you have a diffused effect where you have a lot of people in America who just own little bits of it. Okay, not to make a pun on that. But if you really listen to the scuttlebutt, people who are involved in this, they're going to tell you there's a huge Chinese element of people trying to get their money out and people trying to get it into Bitcoin. If you go down to Newport Beach, California, you will see multi-million-dollar homes, which used to be just million-dollar homes, where a quarter of the neighborhood is vacant because you just have people, Chinese buyers, trying to get their money out. What do they care if they pay $10 million for a house that isn't worth $3? They have $3 million. If they're in China, they could lose all of it.
What about the fact that we have the CME coming and we have all these, the NASDAQ, futures instruments? There's going to be a lot of other ways. It's not just going to be the 21 million Bitcoin anymore. You're going to be able to, trade different instruments.
Yeah.
Could that then put at risk the broader market, or do you think this is really just, we're talking about it too much, it's too small in terms of its market cap, this isn't a risk to the whole financial system?
Yeah, they said that when Netscape came out and it, quadrupled in a day. And they said this .com stuff, they didn't even call it that. They said this is just an anomaly. I think there's going to be more to come in Bitcoin. I wouldn't go in and invest in it. I just would watch the flex because there's going to be other blockchain technologies that come out. And the other thing you have to remember, people don't get how this works. It's very hard to keep your Bitcoins. And I understand that synthetic stuff, but I think the CME is making a big mistake. And I think people coming out saying we're going to offer people these futures, right? Why are they offering those futures? Because you and I can't buy Bitcoin easily. So we're going to make a derivative to do this. Doesn't that sound like the Big Short? So I don't think this is going to end, I don't care if I come back 5 years from now and Bitcoin still exists. The point is there's nothing fundamental about it. You own Bitcoin, you don't own a technology, you don't own anything. This is like gold, but gold that's pretty easy to lose.
I don't think we're going to have to wait 5 years for you to come back, but you did say you're going to come back when we get our inverted yield curve and we're going to start our clock, right? 12 to 18 months, everybody?
I'm getting my plane tickets now.
Set your iWatch now. Lee Munson will be back.
Yeah, I'll stake the career on that one.
All right, Lee, great to see you. Thanks so much for coming by.
Appreciate it.
Have a question about